Alrighty, we are on and we are ready to go. We'll just test the microphone here. Get this good to go. Alright, let's get this live in action. Public. Cool. Alrighty, so we should be live, I believe. Should be live here. So we'll see how we go. Something a little bit different today. Anthony, how you going? What I'm just going to do, I'm going to send this link to the Discord members. So this is just something one-off thing I'm going to do, just for the YouTube community. So we'll get that up. Welcome. Let me just get this link for the community. And I'll send this through the Discord. It's all going to be recorded too, right? 3:22. Yeah, it's a bit of a weird time to do it. My voice is going a little bit, so forgive me if I'm a little bit quiet today. Hello. Yeah, something different. I haven't gone live on YouTube in quite a long time, so if you've got questions too, you might as well leave them in the comments below. I'll get back to you guys when I can. What I do for the Discord, just so you guys can see, one element that I do for the Discord is on a weekly basis we'll review the market. So usually this is in the Discord. This week I'm just going to do it for YouTube, just so you guys can see kind of what we talk about, what we do. There was a lot last week to think of, in my opinion. There was a lot that happened last week, so it was pretty interesting. And I've also changed my cursor. A lot of people have been asking me to make it bigger and also make it a different color, so I've done that, and that should obviously help you guys see what's going on. So I'll make it a bit easier for you, which is all good. We can talk about New York a bit as well, but we'll get into the price action. So last week was weird, right? Obviously we had big news, global news, right, which impacts the price action. But let me just say this, right? Say on Monday, I think this is Monday's price action. Previous week, we got to keep in mind if there's any red folder news, right, that could impact price. That can always impact price. So I want you guys to have a look at this. See if that makes sense for you. Just have a bit of a look, right? Have a little bit of a look. I'm not going to go into too much detail about short-term lows, intermediate-term lows, but you might be able to pick it up. That's something I've reserved for the Discord, but I may make a video on market structure a bit later down the track. But long story short, on this particular day, we swept this sell-side liquidity point here, so we swept that swing low. After sweeping that swing low, obviously we reacted to the upside there, created this inversion fair value gap. There's also a busy here, which you can see. So you've got that busy, and then we use that to project higher. So when I trade the London session, I'll trade anywhere from 2 o'clock to 5 o'clock, sometimes a little bit before, because there is a macro, right, from 150 to 210. So a lot of people ask me, okay, well, when do you trade? That's when I trade personally, but we can talk about New York again, because it's the same principle. You're just looking for different liquidity points, and obviously it's a bit more volatile too, right? So that's one thing to keep in mind. So let me just go through this as well. What have we created here, guys? What is right here? Can someone tell me in the charts? I want to speak, but I can't speak. My voice is going a little bit too much. But what's up here? What's this and what's this called? What would you say that is? Because you've got 11 watching here, right? Let me know. Let me know in the chat below. Why do these two things make a good liquidity target? Is probably the thing I should ask you. Yeah, exactly right. Yeah. Equal highs. Now, what happened here? Let me just get this up. Relative equal highs, yeah. And to be honest with you, I think they're equal in height. If I grab this candle, the high is 18263. 18263. They're exactly the same height as each other, exactly to the tick. Exactly to the tick. And we'll talk about turtle soups today a little bit too, so we'll get that going as well at some point. But realistically here, right, we came down, we swept this liquidity. We swept this liquidity. Equal highs, exactly equal highs here. The wick rate of liquidity, we had an inversion fair value gap. We had equal highs as a target. So when price retraces back here, that's a good opportunity to go long. It's a great opportunity to go long because realistically, the price action, if you get a long position up, the price action should be at least able to take these highs. So by that point, you should be able to go to break even. But mind you, there still is more liquidity to target, right? Because look what price does here. Look what price does here. So what you call this is the trend line liquidity that I talk about all the time, right, on my channel. It's also low resistance liquidity. Now, what does that mean? What does that mean? It means that this liquidity is easy to target. People are putting their stop losses here and they're riding the wave down, support and resistance traders. This is when the market targets those stop losses, if that makes sense. So it's one of those things, right? But that is the first price signature there. It's really, really important to keep that in mind. Really, really important. So that's the first thing, but we're still in the session. We're still in the session. So we form that trend line liquidity. We push up one more time. Now, have a look at what I've marked out here. Look at this, right? We raid this swing high, so we raid liquidity at the top here. We've got a shift in structure below this swing low. We've got a return into an imbalance. That is your 2022 model. Even the return here, that's your 2022 model. That's the silver bullet model, right? So that's your short position. Where's your stop loss go, bud? That's the thing that people would be asking me, like, do I have to put it all the way above this high? And my answer is probably no. Why? Because you got an order block here, an order block here that should support price. The one way that I'd probably do it, I'd measure this wick and I'd put it just above the halfway point. If I really want it to be a bit more risky, I'd put it above the bodies here because then really there's 1, 2, 3 PD arrays that you'd be disrespecting. And if you disrespect that, you're probably going to hit your stop loss. So you can see price comes down, sweeps this low again, and then ultimately trades in like a range for quite a while. So this is quite a messy day, but mind you, when you have messy days where the price action is seek and destroy, where you go up and down, up and down, up and down, realistically here, let me know in the chat who trades the New York session. Just let me know who trades the New York session and who trades the London session, just so I can kind of gauge what you guys do. Let me know in the chat. This is Monday the 15th of April, so it's early last week. So if you trade New York, this is a dream for you. This is a dream, right? When you've got all this, how you going? When you've got all this low resistance liquidity and you're stepping up, or it could be stepping down. New York session should be easy to take a trade because the drawn liquidity should be easy. It's up to you how you execute that. Now, the way I see it is this, and I'll just go through this particular day on New York, and then I want to focus mainly on the London session. But have a look at this. Have a look at this. There's your rate of liquidity, of buy side liquidity there. We'll put that on the top. Now here's the only messy thing, right? That's a big shift in structure right there. But the messy part about this is that we take out this internal swing low. That's the messy part. It would have been much better if we came down here and then retraced straight away. However, this 3 drives pattern into this sell side imbalance that rests above equilibrium. And what do I mean by that? Let me show you. From this high or this high to this low, it rests between the optimal trade entry ranges, right? So realistically, we've got the 3 drives pattern into an optimal trade entry range. We've still got all of London session liquidity, London lows here, Asian lows, they're waiting to be taken out. So that is your entry. That's your entry. Somewhere in here, right? Somewhere in here. If you entered here, where does your stop loss go? Well, say you entered here, probably above that swing high. Probably above that swing high, because then you'd be disrespecting quite a few different PD rates, if that makes sense. So, Josh, London AM, cool. Nice, yeah. We'll get onto that, This is quite a big, not a big live stream, but yeah, I haven't gone live for a while, to be honest with you. The markets aren't live at the moment, if that's what you're asking. Weekend at the moment, so we're doing a review of the markets, but and if my voice sounds weird, I'm a little bit sick, so forgive me there. This will be all recorded and uploaded anyway. I'm from like south of Sydney. Anyone from Australia, I'm from Wollongong. Most people know that. Anyone from overseas, I'm from Sydney. It's a bit easier. Nice, Andy. I remember you. I think you had your name as Andy as well. And that was yesterday. So this is what I target. Bang. That's what I target at minimum. Right? All these swing lows hold liquidity. And why or how do you form a bias on this particular day or an idea of where the market's going to go? Well, the fact that you haven't taken out London lows and you haven't taken out Asian lows, and London has trended in the same direction as Asian session, just says that, wait a sec, we got to rebalance the market. We have to rebalance the market. And mind you guys, look at when this occurs. Look at when the entry occurs. And I want someone to tell me what this is. 950 to 1010. What is that? Can someone tell me what 950 to 1010 is? What's 950 to 1010? What's 1050 to 1110? What's 250? Yeah, sexy macro. It's all a macro. They're all macros. You can't make that up. Like the third drive happens during the macro. That should give you the final piece of the puzzle and the confidence to enter the trade. Now, this again is messy, but is there still liquidity even though we've swept our low? Yes. Why? Because you've still got London liquidity and Asian liquidity. This stepping up price action is perfect to target. It's low resistance liquidity, and that's exactly why we smack down lower. So, again, that is what happened in price. We had a massive bleed in price, and then the next day have a bit of a look at what price action does. So now we're heading into Tuesday's price action. So again, me personally, if I trade the London session, I'm probably looking at around here, to be honest with you. I'm looking around here. Now, do I see anything here to take advantage of? Not really. But down here, do I? Yeah, I do. I see this, and this here is your original accumulation. People make this way too complicated. Market maker, buy model, and sell model, they make it way too complicated. Way too complicated. So have a bit of a look at this, right? That's your original accumulation there. We push down, we sweep this low here, and we tap into this bullish gap. There's also a balanced price range. Peep this, that's your balanced price range. But it's very seek and destroy. Up, down, up, down, up, down, seek and destroy. We raid liquidity. We create an inversion fair value gap here. Sorry, let me fix that up. Right here, we create the inversion. We return to that inversion, and we leave all these swing highs in the original accumulation. So, in other words, how can you phrase a trade when price returns, stop below this low, take profit, whatever you need? You get a 1 to 2 if that's what you're looking for. So, that there would have been the silver bullet trade. That is a nice silver bullet trade. And then I'm just going to get this up here too. Have a look at this. Really good price delivery in terms of price action. Like, really messy here. And then he's really clean as well. So, have a bit of a look. And yeah, I'll go into BPRs. I'll go into BPRs in a sec. No worries. Have a bit of a look at this price action here, guys. So we come down, we sweep this low. That's Asian lows. And again, we react off Asian lows and Asian highs all the time. So we react off an Asian low. We have an inversion fair value gap, and then look what we do. straight up, original accumulation. That is the market maker buy model here. So that's the sell side of the curve. That's the sell side of the curve. I like that strategy, Jimmy. I like it. And this is the buy side of the curve here. So sell side, buy side is all this leading up to the original accumulation, which is this. That is also the original accumulation, which makes good liquidity targets. I just call it the accumulation pockets. That's it. That's all I do. That's what I tell my Discord. They're accumulation pockets. Like, if you have the price action doing this, like imagine the price action does this. Well, guess what? We target those highs. We come down. We probably sweep something on a higher time frame. Tap into like a higher time frame imbalance. That's your smart money reversal. That happens during a key time window. And then you choose what PDRAs you enter from. So accumulation pockets are always good liquidity targets. It's different, right? Look at this. Compare that to this. Notice that, like, yeah, we could still tap into a high time frame PDRA, but look at this. This is how you get tricked into fake market structure shifts. Look. Yes, there's liquidity here, and yes, there's liquidity there, but there's probably imbalances here. And if you're on the wrong side of the market in terms of high time frame, you could be like, oh yeah, I'm going to hold it to these highs here. I'm going to hold it to these highs here. But actually you're bearish, and what'll happen with price, it'll do this. And then it'll reverse off an order block or something. You'd be like, why did it get stopped out? It looked like a market structure shift. Liquidity has to be good. It has to be good liquidity, and if you're not looking at higher time frames, which I personally don't look at anything higher than the 1 hour, there's no need to trade. 15 minutes, 30 minutes, sometimes the hour. This trade here is more than enough. That trade there is more than enough. I don't need to go, oh yeah, I'm gonna hold it to this high. That's not what you need to do to make money. I think a lot of people get that, confused, where you need to hold, oh, it has to be a 1 to 3, it has to be a 1 to 2. I can't take partials, I've got to hold a 1 to 3, a 1 to 2. Not necessary. And more than not, you'll probably be like, why am I getting stopped out of break even? A lot of people ask me that. Or why is there a fake market structure shift? It's probably something like this. So hopefully that kind of makes sense. That is also the market maker buy model. Once that accumulation gets taken out, the model's complete. Right, so people just make it more complex than it needs to be, but that's Tuesday's PA or price action. And Josh will talk about balanced price ranges. To be honest, here's the thing, right? You got all these different types of PDRAs. You've got BPRs, you got inversion fair value gaps, order blocks, breaker blocks, fair value gaps. A BPR is very similar to an inversion fair value gap, right? It's very similar, but it's where you have, right, a bearish gap that lines up with a bullish gap. Bearish gap that lines up with a bullish gap, right? Compare that to this, where yes, you've got a bearish gap, but it doesn't directly line up with a bullish gap on the other side. So that's the difference between a BPR and an inversion. But if you see that as an inversion, that's fine too, because realistically, it's going to probably do the same thing if you're going to enter from it, so it doesn't matter too much. Andy, recently been eyeing out areas of accumulation, and yeah, you know what, accumulation, beautiful targets, and low resistance liquidity. So for example, and we'll go through it actually, we'll go to the next day. We'll go through it. You can probably already tell me what that is as well. Can someone tell me what that is in the chat? What does this look like? What does this look like? If I come to the markets at 2 o'clock, what am I anticipating straight away? Just by looking at that, like 2 o'clock, what do I think is going to happen at some point? And what's that concept called? For those that, have done the 2022 mentorship, what's this called? 1, 2, 3. Mohammed, what do you mean by the 930 fair value gap? Elaborate it for me and I'll kind of explain if I can. But yeah, Josh, that is the power of 3 concept. So if you have a look, we mark out midnight open, which it's somewhere around here, right? It's not the end of the world to get it exact, right? But it's somewhere around here. So that there is our midnight open price, right? What does price do? We accumulate at midnight open, we manipulate. Now you might say, well, how do I know it's manipulation? Well, it's such an abrupt move. And it's pretty large, which is kind of weird and kind of strange that this move were to happen just before 2 o'clock. It's a bit weird, right? A bit sus. So that's how I kind of have that viewpoint. And then in my head I go, okay, well, which liquidity can we take out? There's this. There's this. And this is an important day to talk about. I talked about this with my mentorship student. He might be here as well. And there's also this. Now here's the thing. I was anticipating, because these are like your Asian session lows, right? That is a previous day low. I was anticipating a reaction off the Asian session lows. But did we get that? No. Doesn't matter that I'm wrong. No. Because there's no trade to take here, which is the important part. Like, you see that does not look like a liquidity sweep to me. That looks like we're going lower to me. There's nothing here in price action. There's nothing here in price action. And yeah, exactly right, yeah. So anywhere above midnight open is a good sell price, but unfortunately that was pre-session, right? Pre-session happens sometimes. To me, we take out that low, we don't react there. So I think, okay, we're probably heading to the next swing low. When we move to this swing low here, how do we react? Do we reject it or do we displace through it? That's the key difference between a reversal, like a sweep and reversal, or a continuation. Let me know, do we displace through that or do we like kind of reject it? Yeah, I appreciate it, Mohammed, I appreciate it. I'll try to make it simple. You can talk about things in a complex nature, but realistically, I think too many people make it more complex than it needs to be. And the more simplistic your viewpoint on the market is, you still got to understand the concepts, but the more success I think you'll have, because it's easy to understand, it's easy to replicate, you know what I mean? So we take out this swing low, I'm like, okay, interesting. Do we react off that? No, I'm like, wow, it was extremely, extremely bearish for the meantime, right? We take out this low, do we react? Well, yeah, but is there a market structure shift? Well, no. So there's no trade. That's the thing. So you got to wait and wait and wait and wait and wait. And I think, yeah, someone in my Discord took this turtle soup. I remember now. I remember this. This here, this is Wednesday. This is Tuesday. That is a previous day low. Write that down. Write that down. If you sweep a previous day low, right, we'll write this in. If you sweep a previous day low, previous week low, previous month low, there should be some kind of reaction off it. And if there is, like this, there's a good chance that we're going to retrace a little bit. There's a good chance. And what do? We retrace. Where do we take out? The original accumulation. That there is also the market maker buy model. It's the same thing. Accumulation, manipulation, distribution. Right? And also the market maker buy model, the sell side and also the buy side of the curve. And then have a look at this, inspect this, right? Inspect this. Have a look at that. Now, forget these names. This swing low rated this swing low. After rating that swing low, do we have an impulsive move to the upside? Yes. Impulsive move. We also had a change in the state of delivery once we break past these candles. That's also an order block. Price retraces back down to the order block. You enter from the bullish gap or in equilibrium, whatever you want to do. Your stop goes below this low, but why that low? Because it should be protected. It's a protected low because it's rated liquidity. That's kind of all I'm trying to say here, right? Where do you target? Well, you can target this swing high here. And that's what it wants. That's what it wants. It takes out that swing high, then it comes back down, right? And let me just get this up for you guys too. Look at this. Who knows what I'm about to do here? Who can tell me? Who can guess before I do it? Who can tell me the significance of that, of the 2 to 2.5 level? And why that would be a good place to take profits. Yeah. Yeah, I can do that. I can do that. Thanks for letting me know too. Thanks for letting me know. And you know what, I might make this still a bit bigger, but I'll just move the chart a little bit so you guys can see. I got the other screen here, I wasn't really too focused on it. All good, all good. And then we'll bring this up too. Beautiful. Cool. So yeah, we had this rate of liquidity. I got this body high and then this body low. And then what I did, all I did here was I projected 2 to 2.5. That's where you can expect a retracement or a reversal. We did get a retracement there. If not, you'd probably get stopped at break even, right? Which would be hard to manage, right? Considering you could have taken your partials there, right? So that's one of those things. So that's kind of what we're looking at here. Might even move this. Might even move to the top here. So here we go. So just so you've got the price action there and you can see the price action. But this is NQ, right? It's NQ. Now, what are we doing in London session and pre-New York? We're generating sell side liquidity. That's all we're doing here, right? So price action stepping up, stepping up, stepping up. What happens during New York? We absolutely sell off. We absolutely sell off. This, yeah, it was a bit of a pre-market thing or pre-silver bullet. But it was good. It was really good. Like, look at this. We rate all this liquidity. This is really nice. It just came a little bit early for a lot of people. But if you caught it, beautiful. You've got an inversion fair value gap here. So that's your inversion. There's a lot going on here to support the price, right? So that's your inversion fair value gap, as you can see. That's your order block, right? There's a few things. Because what I do, I kind of wake up in the morning and see what price has done a lot of the time. And sometimes I'm like, wow, that's crazy. What a big move we had. Andy says, I managed to catch the 930 move as price manipulated into a 1 minute fair value gap. Taking it all the way down. Yeah, nice, man. Nice, 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 nice. It's one of those things where, you know, all of this is liquidity to target. All these swing lows. Again, what's that? Accumulation. Any of these swing lows are liquidity to target. And what do? We smash it. You might be like, okay, well, where's your entry? Where's your entry? Well, you can enter from here too if you wanted to. That's a civvy, right? So it depends what you want to do, right? So there's a wide range of ways to actually enter the market. And use time to give you that trust. That's my advice, yeah? Are there any questions at all with what we've been doing so far, guys? Before I kind of continue. We've got probably about 23 people, I think, here. But if you've got any questions, feel free to leave them in the comments below or in the chat. There's your rate of liquidity. Market structure shift technically happens. Yeah, we'll say it happens here. Price retraces back up into an order block, into an inversion fair value gap, into this candle, which is a breaker block. So we've got multiple PDRAs there supporting price. And then we sell off. Short-term high, intermediate term high, because this high is a bit lower. That high should be protected. So if you went for a short from here, where's your stop loss go? It doesn't need to go at the top here. It should be able to go here. it should be able to. And if you're a bit concerned, go above the order block. So that's how I manage my stops. Absolutely sold off. Absolutely sold off, right? And then we move into the next day, right? Move into the next day. So this is now Thursday. So this is something that, let me try and remember. I think someone in my Discord caught this long here off a turtle soup, right? They caught this long. What pair is this? Let me move my let me move my face, right? Let me move my face. And I'll just move the chart over here. So what are we looking at? We're looking at NQ1. What is that? It's a future contract. What's the time frame? Top right hand corner here, 1 minute time frame. And this is from Thursday the 18th of April, which is, you know, a couple days ago. So the protected high, yeah, I can explain that. I'll explain it here, but with a protected low. It's the same thing. So I'll do like an illustration. So say you got a high, you sweep that high, right? Obviously that's your raid, right? That's your raid on liquidity. Then say price does this. Let me get this back up. Then say price does this. It comes back down, makes a lower high, shifts down, and has that shift in structure. This high here should be a protected high. It's also called an intermediate term high. Why? Because it rated liquidity and we've had a failure swing high that then shifted structure again. So if you then were waiting for a retracement into an imbalance in this leg, if you entered from there to go short, your stop, the best place to put a stop, is above the protected high. Why? Because that'll invalidate your trade. What could happen, which I've seen, I've been a part of it, this could happen too, where price comes down, you go, oh, I'm gonna enter when it comes back here. You enter, it goes down again, you move your stop to break even. Price then turtle soups this high, leaves the protected high, and then boom, straight down. It's like inducement. It's tricking people to move their stop loss. So that's kind of what it is. Yeah. Hopefully that makes sense. And so what'll happen here, like your stop loss should go there. Same with this, right? We form a low. We sweep that low and tap into an imbalance. Then we form a higher low right here. So therefore, if you enter from here, where's your stop loss go? It goes below this swing low here. And then only when you create another higher low should you really move it, if you're still in the trade, because then it should be protected. That's kind of how I see it. But yeah, we had this opportunity. That's like a turtle soup. If not, you have this bullish gap, right? Rate of liquidity, bullish gap. You don't need a market structure all the time, guys. That's a market structure shift, sorry. A lot of people ask me that. What do you need though? You need conviction. You need a clear draw on liquidity. And you need to be in a key time frame. So again, look at this. 150 to 210, that's a macro. So that's the final piece of the puzzle. Yeah. How am I? I'm good, man. I'm good. I recognize your name. I recognize your name, Sadak. I recognize your name. Now here, again, look at what happens here. Let me just get rid of this, right? Let me just get rid of all this. Buy. And let me kind of talk through what could happen to you, right? What could happen to you here? You want to go for a short. You're like, oh yeah, there's a market structure shift. Price is broken past. I'm going to go for a short in this fair value gap here. So you go for a short somewhere here, you put your stop above that high, right? Maybe get a really good fill. And so when price comes down here, you're like, yep, I'm going to break even, right? You go to break even. What happens? Price stops you out, only then to move in your direction. So what's happening here with price? Let me draw this out. We're inducing this high, right? It's not technically a protected high yet. This one here is though, because it has rated liquidity, right? So let me just kind of get this in the middle here. It has rated liquidity. That makes sense. And then what do? We form a lower high. So if you were to enter anywhere here, say you were to enter here from this inversion, you're like, yeah, okay, price is giving me what I want. I'm going to enter here now. Where can your stop loss go? Well, it should go above the protected high. It should, right? And then guess what? When you form a lower high, then move it. I mean, you'd probably already have taken your position out, to be honest with you, but if you haven't, you stored a partial in, then move it to break even, then move it down, you know what I mean? So that's kind of how you see it. Same thing kind of here, right? So we had that opportunity to go short. This here is just generating more liquidity on the sell side to then target on the way down. What's the way down? Well, it's all this liquidity here and this gap, the new day opening gap, I believe that is. So hopefully that kind of makes sense, because it's happened to me before. And sometimes I have to say to myself, wait a sec, should I really be moving my stop loss? Because I'm marking this out and thinking, nah, I shouldn't need to move it. The 16th. How do I determine an inversion fair value gap live? Well, let's say for example, I don't know, let's go to maybe here, right? This is the New York session, right? Again, what does this look like? What does this look like? If you're a New York session trader, you should be having a long bias. I don't really like the word bias. I don't like it. Too many people put too much emphasis on it. If Jimmy Patel's still here, he'd know about that, right? He'd know about that. But long story short, you enter the first macro, you enter silver bullet. Why am I long? Because guess what? We've taken out previous day liquidity, right? How have we done that? Manipulation. This is what we target here, right? So, how do I determine an inversion fair value gap live? Once you sweep liquidity, it's just another PD rate to enter from. So what I'll be looking at is this. I'd see this candle form, and then I'd see the candle close above this bearish gap. So what you've got here is you've got a bearish fair value gap. Now if we were going to keep going lower, we should respect that. But what do? We close above it. When price closes above it, it becomes an inversion. I map that across in time. Now there's two ways to enter from inversions. Number one, as soon as price closes above. As soon as the price closes above. Number two, when price returns into it. Now, this bearish gap becomes an inversion gap when price closes above. I can also map that out in time. So does this one. But. Why would I not want to enter? Can someone tell me this, right? This might be a bit tricky, but if you've been in the markets for a little bit, you probably know. Price came up, it created 3 inversion fair value gaps. Why might I not want to enter from this top one when price retraces? Like, why wouldn't I go for a long here? Can anyone kind of tell me that in the chat? Yeah, bias is one of those things where if you marry your bias, you're going to get wrecked. Unless you're always, if you're right, then it works, but if you're not, it can be tricky. But can someone tell me this, right? Like, the market's gone up here. Why not go for a long when price retraces here to make the price go higher? Why not go for a long here? Why should I go for this inversion or this inversion instead? Can someone let me know? Yeah, there's a couple of good things here that you guys are saying. I like it. Here's the thing. In this leg of price action, what do we have? Red candles. Red candles, no breaker block, red candles. That's the first thing, right? There's no other PDRA here apart from an inversion. The second, which people have mentioned, grab your Fibonacci, right? And go from this low to that high. Just get up the halfway point. Since if there was a breaker block here, might be a different story, because price might start to accumulate here and then we might shoot up, but there's no breaker block, right? So you got to keep that in mind. Price always moves from discount to premium, and as someone mentioned, into discount. What is also in discount is an order block. It's too overzealous, in my opinion, to expect price to come back down here for you. It almost does, but it's even pretty much overzealous to come back down into the order block. It doesn't have to. It doesn't have to. That's the thing, right? So a safe trade would be this. Equilibrium, right? Stop. Well, that's a massive stop. So if you do that, it's too big. But what you could do is this. You could go below 3 PDRAs. So below this inversion fair value gap candle, or below the inversion fair value gap. So therefore, you've got this PDRA, this PDRA, and this PDRA. If not, then you might have to enter from up here. Stop loss below the order block. But notice here as well, like this is good too. This is trend on liquidity there. So that becomes a good draw on liquidity as well. Price pushes up. Price pushes up. Once we take out this, I'm neutral. And you should be too. What does price do? Midnight open. You can't make this up. Look at this. Midnight open, look. Look at this. Thursday. Midnight open, Thursday. We go just above midnight open. Right? We go just above midnight open. And then we form our inversion fair value gap. And this is obviously heading into lunch hour. That's your inverse fair value gap there. And we've got all this liquidity to target. And all these swing lows to target. What do? We take that out. So hopefully that kind of makes sense. Hopefully that kind of makes sense. So that's the original consolidation there, and that's technically consolidation here too. That's consolidation, but we don't have to get to the top. Why? Because midnight opens here. It acts as like a magnet, and we could reverse from there. Friday was crazy. Look at this. Look at that. Enough said, right? Enough said with the Asian range. I know a lot of people that made quite a bit of money doing this. I don't really trade Asian, to be honest with you. I'm not really a fan. I have traded it, but not frequently, right? So it's one of those things. But look at this. Large Asian range. Look at the London Open session. Asian range actually spanned just as much, if not more, than the New York, which is crazy. That's extremely rare to have that. But you might be like, what's this low here? I've got to go to the daily time frame to show you that. And this is the only time I go to the daily. If we have like a massive bleed in price and there's nothing else on the left hand side of the chart, right, to target, I have to go on the daily because that's the only liquidity left. So again, have a bit of a look, right? Do I dismiss London? So we take out this Asian low, sorry, this monthly low from like 31st of Jan, which is a lot of liquidity. What can you expect? Again, you can expect some kind of like reversal. Look at that. And then automatically we reverse. And I took 2 trades on this particular day. If you follow my YouTube and TikTok, or probably my YouTube and Telegram, you know, right? The first trade I took was actually a short from here. 1, 2, 3 short to this sell side. The second was a long to target this trend on liquidity, and we ended up being bullish for most of the session until kind of this time frame. So again, we had the 3 drives pattern. We generated all this sell side liquidity, and then we sold off. So I like to target trend on liquidity because that for me was a no-brainer. It's going to take it out, and it's going to take it out aggressively, right? Same with this, aggressively. Now, what else can we talk about here? Yeah, look at this. We kind of reversed in Asian session. What can you expect then? Well, you can expect that price goes at least back into the equilibrium of this range, which it does. But then it generated more liquidity, which for me meant that price was going to push up further. So I still traded it. Let me kind of read your comments now. So, Mohammed, do I dismiss trading London session if I have a large Asian range? No, but I don't always expect good conditions, so I'm a bit more careful. I got to see something good, if that makes sense. One day at a time. I'll read your comment now. October 23rd to March 21st. We still have not hit the 50% retracement level, even though it just seems like we've had a large sell-off. Yeah, that's true. Sadak, do you use IPTA? I've looked into it, but I'll be honest with you, not necessary. That's just honest truth, man. Like, out of all the ICT concepts, right, these are the most important, right? That's pretty much it. So, IPTA, and going back, 20 days and what he does. I've watched these videos about that, but I've never really, studied into it. Me personally, I've only really looked at the 2022 mentorship, some of his core content regarding like breaker blocks and whatnot, but nothing too crazy in that regard. So hopefully that makes sense. Hopefully you guys have gotten something from today so far. If you have any questions, feel free to leave them below. I'm just going to check what the Discord's doing. And I'll get back to your questions in just a second. This will all be uploaded, right? It'll all be uploaded. So no need to worry if you can't make it. Like, that's honestly all you need, guys, in my opinion. So, you can predict the reversal if you use... Yeah. Sometimes you can use that to predict the reversal. So, I'll be honest with you guys, like... when I go into the markets, do I have a strong bias? Sometimes. Like, do I have a clear idea where price should go? Sometimes. Sometimes do I not? Yeah. And realistically, I'm more concerned about liquidity during the session. Like, if you trade in New York, yeah, the price is going to move a lot bigger, right? And a lot more. But if you trade in London, this here, like if you take a trade like this, if you took a long, right, something like this, that's sufficient. It's enough. Yeah, so one day at a time. Do I have a paid group? I do. So I've got the Discord. I've also got Telegram, that's free too. TikTok, that's free as well. So you can check that out. I've got probably my link in some of my videos in the description of the video. I might put in this one too. But that's the main thing. So if you guys have any questions, feel free to to ask me, let me know. Yeah, Friday was pretty good. Massive sell-off there. Let me get up a new chart, and we'll call this YouTube. I'll go to the daily time frame just for a little bit, to end the stream, right? So, all right, so I'm gonna do some stuff. Let me know if it makes sense. That's the first thing. Second thing is this. So look at this, right? Look at this. We are in an imbalance here. There's probably something on the weekly. We'll see what the weekly has too. Yeah, so there is a weekly imbalance and then a weekly order block there too. So keep that in mind. But here's the thing. I've marked out the dealing range now. Now, if you wanted to, you could even go a little bit less. Like you could go like from here. And then you can see what's below equilibrium, which we are below equilibrium. And then you could get up these two values here. What's in that range? The order block. This imbalance here. So that's kind of what I'm doing at this point. And the thing is, on smaller time frames, these are all ranges. On smaller time frames. So that's personally how I do it. Because I mean, I don't need to look at the daily. But guess what? If we start to react from here, then good. That's great. But there's a seasonal tendency, as ICT said himself, for bearish price action at this point. And we have come down like all week. Pretty much, we've been pretty bearish. So that is something to consider. But just so you guys know, right? I shouldn't say never. Maybe 1 out of 40 days, I'll look at the daily chart before I do my analysis. I don't do top-down analysis with a daily chart. There's no need for that. Anyone that says you need that for a 1-minute chart entry is lying to you. And they're overcomplicating it, because unless you're trading on the 15-minute, there's no need. I use this chart, I use this chart. I use this chart. On those charts, I find fair value gaps, highs and lows, and order blocks. Then I wait the 1-minute time frame. I look at macros, silver bullet time frames. I either look to target a PD array on the 15, I sort of do the 15, the 30, the 1 hour, or wait for liquidity to be swept and then do a reversal trade. That's it. That's all I do. That's it. So for me, in my strategy, what I do, there's no real need for me to look in the daily. Like I don't go like from the daily to the 4 hour to the 1. Nah, I don't need to. I'll look on the 15-minute to start. If there are imbalances on the 15-minute, I'll mark them out. Liquidity, I'll mark it out. And then I see in London session, here's the thing, like I see in London session, that's Asian buy side, for example, that's Asian sell side. I'll see in London session, so that's buy side, that's sell side. I'll see where price action is. If we're kind of here in the middle, it's more risky. If we're close to one, then maybe I trade towards it. If we're down here and now it's London Open, maybe I go for a reversal. I look for the power of 3. That's kind of how I do my trades. That's honestly that's all I do. There's no need to learn everything in my opinion in terms of ICT's content because you get yourself worked up. Analysis paralysis they call it. Yeah, time frame alignment. So you can't just go in and go, okay, yeah, there's a 1 minute fair value gap, I'm going to short it or long it. You can't do that. Like there needs to be some kind of basis. So let me show you what I do, right? Let me show you what I do. Let's go back to maybe we won't use Friday, we'll use something back here. Where's 3 o'clock? Okay, cool. So we'll go back here and we'll go back to replay mode and then we'll end this stream. So we're at here, that's like 2 o'clock. Cool. So I'm looking at this. This is all I see. This is all I see. If you wanna know what I do on a daily basis, I'm gonna tell you now, right? So have a look at this, just briefly. Right, this is what I see. Now, with price action here, this is messy. It's very messy. Very, very messy. But what do I see on the left-hand side? I see this. We tapped into this imbalance. We rated liquidity, we tapped into an imbalance. What do I see on this price leg? Fair value gaps. So, a part of me says this. We may trade towards this liquidity, Asian lows, and fill the imbalance. Can I find a trade that suits that? If not, I'll find a trade that suits this to take out one of these swing highs. Go down to the 1 minute time frame and watch price. Oh, what did we just do? We just swept something that's important. What was that? Asian session highs. What's my bias? Bearish. Why? Because we just swept liquidity on one side, and now there's a high chance, doesn't have to happen, but there's a high chance that we're probably going to go lower. Doesn't have to happen, but, right? So you just got to wait for the opportunity. You might be like, oh, well, what's happening here? Why are we still going up? Well, we're just generating more liquidity, guys. That's all we're doing. We swept Asian, look at this. We swept Asian highs here. Let me just mark this out. Just because we sweep the Asian highs, am I going short straight away? No. Right, so look at this. I'm not going short here. No way. Why? Because, yeah, there's an inversion fair value gap, but look how long or wide my stop loss would have to be. I'm not doing that. Sorry, reverse that. I'm not going to do this. I'm not going to put my stop above this high. No way. No way. That's too big. And that means even to get a 1 to 1.5, I need to target all the way down here. It's not going to happen, right? It's not going to happen. So, realistically, right, this is kind of what we're looking for. I'm watching. I'm waiting, right? I'm waiting. Price sweeps this high again, creates this inversion. And let's assume, right? Let's assume you go, okay, there's an inversion here. I'm going to enter short from here. I'm going to put my stop loss halfway in this wick. Well, what happens? You get stopped out. Okay. It's once, right? It's once. So, realistically, is one stop out going to be the be all and end all for your account? Well, it shouldn't be. It shouldn't be, right? You should be able to manage risk enough to take 2 losses at least, 1 to 2 losses, and then be able to take a win and make that back plus more. So, let's assume you went for a loss here. Okay, Ruben, you went for a loss here. What do you do now? Okay. I'll wait. What do I wait for? The macro. When's the macro? Here. Is there a setup? Yes. What's the setup? Inversion fair value gap. Breaker block. Rate of liquidity. Have a look, right? Have a look. And what's that do? What's this move do? This move You trust the macro. How do you enter from this inversion? Look at this. There's also the 3 drives pattern, 1, 2, 3, to take out this buy side, which is even better. You stop and go above that high if you want to, but it doesn't have to. You can go above the breaker block. And you target whatever you need to. Like, you can get, even if you took 2 losses here, this would make it back with partials. At this swing low, it'd all make it back. So that's kind of the thought process. That's what I do. That's all I do, right? And then guess what? Once we take this out, this sell side, am I immediately bullish? Well, guess what? No, because we've got imbalances here that we could dig into. But could there be some kind of retracement? Yes. That for me is like the move. If I miss that, I've missed it. There's no point, chasing price and going, okay, I'm going to actually, automatically go for a long. Let's have a look what happens, right? What does price do? Digs down a little bit further. Have a look, have a look, have a look. Down. So, you might say to me, okay, Ruben, well, why isn't this a market structure shift? Or you might still say that's a shift. And you might still enter off this inversion fair value gap here. But guess what? You shouldn't be going for home runs. You shouldn't be going, oh yeah, I need to hold it without any partials. I'm not taking a partial, I'm going to hold it. Yeah, it's definitely going here. Why do I say that? Because we've got all these imbalances here on the 15 minute, the 30 minute. And we've just taken our Asian buy side. We're probably going to take our sell side and dig down a little bit further, right? And guess what? If you entered here, right, say you went for a long right here when we retrace back in, you should be taking a partial, in my opinion, and I would be. There's no way the price would be moving at that much, 15 handles, and I wouldn't be taking a partial. That could be my full take profit. It could be. So it could be my full TP. Or it's at least going to be break even. There should be no way you're losing on that trade. There should be no way. If so, the risk management needs to kind of shift a little bit, because that's a fake market structure shift, but you can still make money there. You can still make money there, which is a good thing. So hopefully that kind of makes sense. Now that's all I do. That's all I do. So that was the move, right? You can see that's the move, right? We trade to Asian buy side, and once we take that out, we often trade to sell side. Explain 17th of April daily breakaway gap. Okay, let's have a look. Let's get rid of this. You mean this one here? This right here. Is that what you're talking about? There's also a breakaway gap here. A breakaway gap here. Doesn't really matter, right? Could be this one, for example. Could be this one. Could be this one. That doesn't matter. But breakaway gaps, what do they indicate? What do they show? What does this one show? If we have a breakaway gap and then we just place, right, past the swing low, which not in this case, but we just place past this swing low, what can we anticipate? That we target the next swing low. So this is what ICT was talking about, right, in one of his videos. We had this low that was very close when this day closed. So what can you anticipate as a draw on liquidity? Well, you're going to probably target this low, right? You're going to target this low, which happens, right? So that's one of those things. When you just place aggressively past the bodies here, breakaway gap, what can you expect? You're probably going to take out this low and this low. So breakaway gaps indicate extremely bearish or bullish price action. that's kind of what they do. Yeah. So hopefully you guys have got something from this video. I'll do this once in a while. Obviously the YouTube videos are going to stay as is. Time to knuckle down. The next video for you guys that you'll be seeing is probably a review, or maybe I'll do one or two things. A little surprise. I'm trying to increase the what's the way to put it? I want to make these videos useful for you and also give you a realistic viewpoint. So Apex payouts, the withdrawal timeframes, now that I've had a few here, realistic withdrawal timeframes, realistic, not these influencers that tell you they get it in 3 days. Forget that, but they do pay out, which is good. And also we'll be making a video, you guys might find it insightful too. I'm just trying to figure out the best way to do it in terms of production. I'll be making a video on my journey, right? Just so you guys can kind of know what's happened for me. Because yeah, I might have told you before, like I've been learning ICT for 12 months. Not even 12 months yet, almost, I reckon, in about 5-6 days. So I've got old screenshots of my old analysis that I used to do. You can see the improvements probably when I show you guys that. That'll be in the video. I've got voice recordings. I've got videos I took for myself last year, May, June, July, my Forex funds. Blowing an account of my Forex funds on this prop firm and that prop firm, and it's just a real experience, guys. So that'll be something I'm looking forward to make as well. Right now with Apex, 3 payouts, I'm extremely blessed and grateful for that. And it is good to see things start to pay off. For those here that are at the payout stage, congratulations. For those that are still trying to pass accounts, my biggest advice for you is to forget about the money. And I'll talk about this in the video. Trading in general, sorry. Take another drink of water here. Yeah, trading in general, right? A year ICT, before that probably on and off a couple of years. It was mainly crypto retail strategies, so that's kind of what I did. But yeah, I knuckled down, right? And you guys, I'm sure you do that as well. Hopefully my videos can explain things to you and give you insight to things as well, because that's what I feel like I needed when I started. There was a lot of unanswered questions all the time, and it was hard to get all the information I needed. So that's kind of my goal. But yeah, that video, I'll have a bunch of things there, my journey, and it's just beginning, you know. So if anyone that's still on the journey, trying to pass accounts, stick at it. Remove the money from your mind. Just focus on trading. Just focus on trading. Like, obviously no one likes to lose, but until you can manage psychology, it's not going to work. It's just what it is. It's just what it is, right? So focus on that. It's been nice having you guys here, and this will obviously be uploaded once we end the stream. And until next time, guys, peace out, and expect a video probably in the next 2 days. I'm a little bit sick, as you can tell, so we'll see how the voice holds up. But I'm glad I can, come here and give you guys a bit of live stream. So appreciate all your support, and I'll talk to you guys in the next